My stock is Intel, having its best day since March of 2020, up about, let's see, that's 10.5%. And that's as the chipmaker beat on third quarter profits, EPS coming in at 59 cents versus estimates of 33 cents. But it was a slight miss on revenue. Even worse, the company really turned heads after slashing its profits and sales forecast for the quarter and for the year, far below that which was forecast on the street. Nevertheless, you see it's green there, as are all chip stocks, basically. Shareholders seem to like the aggressive cost-cutting measures, $3 billion in cuts scheduled for 2023 alone. And CEO Pat Gelsinger & Co., he has in store more to manage the cyclical downturn in semiconductors. On this note, Jefferies is commenting, quote, Intel's cost-cutting plan not only has the potential to drive $1.50 to the bottom line, but also shift the company culture to a leaner, more efficient mindset. And Jefferies, by the way, has a hold rating on the stock with a $28 price target. I'm going to do a little technical analysis mumbo jumbo here. I want to put a max chart on so that, let me try this one more time. Max chart in so you can see that it never eclipsed those highs of the dot-com boom. Now it is coming back to earth as it did 20 years ago. History repeats or rhymes?
Well, they won't be that bad.
Really interesting, and the cuts are the catalyst here. And what Pat Gelsinger told Carl Quintanilla this morning, that the CHIPS Act is the most seminal piece of U.S. industrial policy since World War II, calling it a profoundly important step. So they're cutting their way to wins here, but they're spending $20 million on that chips factory in Ohio. They're building one in Germany. And if that statement proves to be true, well, then we can all feel optimistic, more so than the cuts, about the long-term viability of Intel and NVIDIA and AMD, and that will be the question. How influential is the CHIPS Act? Because they're all down quite considerably since that was passed.